Every cycle in crypto, we have the same thing repeating. We have people coming into crypto hoping to make 100x. They make maybe a 2x, 3x, 4x. Then they just end up becoming exit liquidity and never cashing out. This cycle is repeating again and again. It did in all the previous bull runs. Last bull run, I made videos on how to find the meme coins. And since then, I've come up with a much better strategy that I'm going to go through in this video, both on how to find the meme coins and then how to extract money from them. And best of all, just not becoming exit liquidity. I want to talk about a cycle that I really dislike here in crypto. And the cycle is that beginners find their way into crypto. They find all of these meme coins. They try to find the next best thing. They follow YouTubers, they Google, they follow people on X or whatever. They just try to find all the information that they can find. Not only is this a bad way of doing it because there is too much information out there, so there's no way that you can process all of this information, all of the analytics, all of the people sitting for like 20 minutes on YouTube going through graphs and numbers. It's just not gonna work out because there's too much data and there's just no way for you to process all of that data and turn it into actions that make sense based on the data. Then once the beginners start becoming more and more comfortable in crypto, they start to realize like how the entire space is run. You have the exchanges being paid to list projects, you have CoinMarketCap being paid to list projects, and you start to realize that there are a bunch of paid influencers and similar. It's just one big extraction fest. And kind of what this strategy is based on is the famous thing that 90% of all meme coins go down by 90% after the bull run. And I would say it's more like 99% go to zero, absolute zero that is. And just a few specific meme coins keep their value and might still go down by like 90%. We have Shiba Inu, Doge and similar. Most of these big meme coins, they pumped like crazy. They still have some value in them, but from everyone buying in at the top, which is most people, it has gone down by 95% since then. But how can we use this as an advantage? So yes, this strategy is based on shorting all of the meme coins, basically having the best time of your life extracting all of this money when everyone is leaving the place. It's not only the trend going down, it's actually people losing interest in crypto as well and leaving the space with their money. So it's an overall trend on many planes at the same time. And there is one key thing here as well that we don't mention. As the bull run progresses, more and more tokens are being unlocked for all of these projects, driving the price down more and more. So it seems like it's this very fail-proof, super easy strategy to do and execute. It's not that simple to execute, but it's still simple enough that pretty much everyone can do it. I'll go through it here in a bit and just show you guys exactly how I execute this strategy. But I gotta say, it's pretty exciting to see that ever since I started talking about this strategy, I had a Patreon community for a little while, but it was so much work for me putting out all of the trade signals and all of this. So I wanna keep the trades for myself here just for a little bit longer. And then in the future, I can start running the community and doing the trading signals and so again. So it's gonna happen in the future, but we need to be a little bit of a bigger community for it to make financial sense for me because, you know, I'm trading, making the money from trading, and I don't want to work a bunch of extra hours just to make a few extra dollars in a community. It doesn't really make much sense. But like 2 years ago, I posted the videos on finding these meme coins, and then ever since then, I've started improving the strategy over and over, making more and more money, and then I've started sharing the strategy. And it's kind of cool that I can actually see on the analytics and on the numbers that people are making more and more money. So people that are following me and watching the videos, they start to kind of get a good understanding of crypto and kind of what's going on behind the scenes. This giant arena of people playing here. We got exchanges, we got people, we got companies and so on. Everyone is trying to extract money from each other. So let's start talking about some of the more common mistakes that I see people doing. It's based on one very important key metric, and that's the win rate. We see a lot of people just going into crypto and kind of like guessing and playing around. It's just not gonna work out. You need to track your progression. You need to track your win rate. You need to track your return, your average return per trade, per time spent over time. So you can track out and map it out over time to see that if I do this for this amount of time, will I actually make enough money for this to make sense? Once you find a formula that works, that projects into the future, that makes you a lot of money, that's when you execute the strategy. But you need to map it out first, because if you don't, then you're just gonna make a bunch of random decisions, spend a bunch of time, and just not make any money at all. So one of the more common mistakes that I see here is just people trading on chain. It's a big mistake because the risk factor is too great. What will happen is that you'll probably just end up losing all of your money to scams, rug pulls, insider tokens, and so much more. Not only that, but it will initiate this kind of core instinct inside of you that is targeting your gambling side, which is a side that we try to stick away from. This entire thing is just simply about executing a strategy. It has nothing to do with betting, gambling. We try to stay away from all of that as much as possible because that is what triggers FOMO, just trying to make unrealistic amounts of money in a short period of time with high risk decisions. That is gambling basically, and it's gonna trigger something inside of you that's gonna make you make stupid decisions. The next thing I see a lot of retail investors getting stuck on here as well is just joining on the big exchanges. I think Binance and the bigger exchanges have a good spot in the market because they're kind of the platform that you bounce between. Maybe I trade on some of the smaller exchanges that have some great low fees and they have some great utility, and some of them are non-KYC, which is amazing. And then we can move the cash from there to Binance, for example, and then over to Europe. For example, when I bought my last car, I had to find a way to transfer the money and pay taxes and all of that, which you gotta do. It kind of hurts to pay like 30% of the, the capital gains tax, but that's something we gotta pay. And then buying the car in crypto. I don't want to go to some shady place and buy a car with actual crypto. I needed to buy the car with real money, so I kind of had to have a nice flow of crypto being made in multiple places to Binance, from Binance to Euro to a normal bank account, and then transferred into my local currency, paid in taxes, then buying the car. It's kind of a messy process, but I think the big exchanges have a very good spot in the market for that. But I think for the actual trading, you're better off trading on the smaller exchanges. Not only do they have more programs for rewards, for trading volumes and similar, they also have campaigns and other things that give you extra rewards when trading. And that is because they're very trading focused. That's the first thing. The other thing is just that, as you guys know, the early projects, the meme coins, they're not listed on the big exchanges. They simply are not. The bigger meme coins, they have great volatility just as the smaller ones. So there's really no advantage to trading SHIB over some other smaller meme coin. But the advantage of trading some smaller meme coin that is not picked up by Binance is kind of like a meme coin is being pushed and pushed and pushed. And then there's the Binance ceiling. Either you make it on top of the Binance ceiling and you become a big boy meme coin, or you don't. And then you just start falling into zero. That's what we want. We want the meme coin to be listed on a small exchange. That's why we sign up on a small exchange. And of course, I got the best exchanges linked down below that list these meme coins. Then the meme coins are pumped like crazy. We don't care about catching this pump because we don't want to end up becoming exit liquidity. Then when we see the trend changing in the meme coin heading into a solid downtrend, that's where we can short the shit out of it and extract all of the money. I'll get more into the step-by-step details here in a little bit, but that's why we trade on the smaller exchanges, because they list these projects that have a bigger chance of going to zero. It's all about increasing the odds. It's all about increasing the win rate and increasing the gains that we make per trade. So some numbers that I usually like to talk about, if we project this out here on the 4,000 trades that I did in the beginning of the last bull run, executing this strategy here, we were averaging above 4% gains per week, which doesn't sound like a lot, but when you start compounding that every single week, it just turns into a lot of money, over 100x over the years. And you're like, oh shit, I had to do 4,000 trades to make 100x. And that's not really it. That's me testing out the entire strategy. So don't worry about that. It's going to be less trades than that. Most of the times I just do a few trades a week, maybe 2 to 3 very well dialed in trades. And in the beginning of the strategy, you're probably going to make a few more. I would think around 10 trades per week. And then as you make more and more money, you start to decrease the amount of trades and just focus on the win rate and the amount of money you make per trade instead. Okay, actually executing the strategy here, just step by step, we're going to go through it. So how do we figure out when a project is in a downtrend? It's very simple, actually. You look at the numbers surrounding the project. Yes, you could go on watching YouTube videos about people talking about the project and all of that. But once again, we need to simplify as much as possible because you can't take all things into account. I avoid all of the hype and just look at one very simple thing, and that's the trading volume. I look at the volumes going in and going out every single day. And what you can do is put a spreadsheet and you start adding it up. The volume's going in, the volume's going out. You get the difference. You figure out kind of the liquidity, like how much did it move for the difference that we have right now. Then you do it on multiple time spans. Usually I trade on the 4-hour time frame here, so I can just say that to save you a bunch of time, just do it on the 4-hour time frame. But of course, if you're a slower trader, then do it on the daily time frame. But it's going to be a little bit more accurate on these smaller projects on the 4-hour time frame. Once you get to the big boy projects, you can start jumping over to the daily time frame. So basically what I've done instead is I've taken all of this math and put it into an indicator that does it for us. It syncs with the time frame, it syncs with the volume, the money going in, the money going out, the sample rate, and basically the change in trend. So you'll know if it's in an uptrend, that's when it's green. If it's in a downtrend, that's when it's red. And the distance between the top line and the bottom line decides the strength of the trend. It's very, very easy to execute the strategy when you put it into an indicator. And that's kind of how I simplify the process, just getting a trend flip going from positive to negative. And that's when I can make my decisions. I then use a stop loss of 30%, and that's for a very big reason. I don't want to put the stop loss too close because then it might be triggered. And if a stop loss is triggered, you've lost the trade. We want a high win rate, so we need to put it in a place where it's only triggered if it's absolutely necessary. The funny thing here with meme coins that after the first initial pump, these insane events is usually in the wrong direction. So it's in the shorting direction, which is how we're trading. So usually when it goes down really fast, and the volatility is in the downwards direction because people are giving up on the project. And that's when we're shorting it and making more money. One very important thing here that I actually didn't mention before, is very good that I have these talking points. Once the trade is in profit, I move the stop loss into profit. Even if it's just 2%, it's gonna increase your win rate drastically, because sometimes you put in a short and the project dips a little and then it recovers and then maybe it goes into an uptrend. But if you put that stop loss into profit, you just guarantee money. We're here to make money. So if you can guarantee your money, guarantee the money. Let's talk about leverage. It plays a very big role into how you trade. Leverage will directly affect how much money you make, but it will also directly affect your win rate, because it will increase and decrease the percentages. So what I mean with this is basically if you play with 10x leverage and that 30% stop loss is now just 3% away, the chances for it to hit that before a trend change is much bigger. And thus it reduces your win rate, it reduces the amount of money you make per trade, and when it reduces the win rate, it projects out into the future, and the simulation will give you a different result. So you need to take the leverage into account for your strategy. If your strategy can support 5x leverage, then go ahead and play with 5x leverage and you probably will make more money. But only if your strategy supports it. Personally, my strategy doesn't support it at all. I simply only play with 2x leverage. It's as simple as that. And it also simplifies my entire strategy more, because then I don't have to think about the leverage. But I see some of you guys taking all of my advice into account. I see some of you guys playing with the indicator as well, using the indicator with higher leverage, being successful in the market. So it's not impossible. It's just that I like to play it safe. I play with 2x leverage, and that's about it. The highest possible win rate, the safest possible trades, projected over time. If you have more questions or want more information on how I do specific things, please let me know. I love to read it. That's about it. Good luck out there in the market. I'll see you guys next time. Peace.